This is the Twin Cities Real Estate Investing Show. Real stories, real success in Twin Cities real estate. Join your hosts, Adam Tafel and Tim Swierczek, as they dive into the world of Twin Cities real estate investing. Together, they share valuable insights and practical tips to help both new and seasoned investors navigate the Minneapolis-St. Paul market. With a focus on relatable stories from real people, this show will empower you with the knowledge and confidence to thrive in your investing journey. Guys, take it from here.
What's going on, Tim?
Hey, man. How you doing?
I'm doing fine. We've got an insurance guy on the show today.
Yeah. I told this to people at the meetup last night, and I said this during the show, but like this is the show you don't want to listen to but need to, right? I mean, because it's not like the fun topic. It's not the exciting one, but man, it's affecting your investments right now, and now you get to get like a pull behind the curtain and really find out what's going on in the industry and why things are happening, and people at least plan a little bit better for it. And if you're shopping for insurance, at least know some of the questions to ask and what, how things are affected, right?
Yeah, I found this episode a lot more interesting than I thought I would. It's actually, I think, I don't know, I was entertained probably more than the average episode, to be honest, by Jordan. So
yeah, because it's something that like you think you know a lot about, but you actually don't, right? I mean, I'm talking everyone, not you specifically, but it's just one of those things where it's like, oh, insurance is insurance, right? And I guess we all kind of know it isn't, but we also think like you just get a good policy from every agent, and that's not necessarily true. And I mean, we even talk about this, like there's times where I tell my clients, I'm like, look, you're going to have to get a bag policy to start your loan because you need a certain premium, but I'm not necessarily recommending you keep that policy, And that, but sometimes people, they just go like the one I think of is Progressive, right? I actually have Progressive for my auto. I don't currently have them for my home. I don't think, I don't know. We've got so many different policies, but they're notorious for if you call their line and you just get a home policy, you're getting a super cheap policy, but it has like really bare bones coverages in a lot of areas that matter.
Yeah. I mean, insurance is something that is a complete afterthought, and you forget about it until it's the most important thing in the world.
Yeah.
And that happens, I talk about it in the episode, a water damage situation I'm dealing with right now. We can talk more about it on the outro. And right now, their insurance policy is the most important thing in their financial world right now. What my clients are going through.
And is it weird? Because obviously this got scheduled a few weeks ago. And then in the last few weeks, we've all had something, including, that was related to like an insurance / rental issue, right? And they do come up and, we don't talk about them. Again, it's not very exciting part of the business to spend lots of time on, but still valuable to know.
Well, yeah, here is Jordan Porteous.
Sounds right to me.
Welcome to the Twin Cities Real Estate Investing Show, brought to you by Shook. Shook is the all-in-one platform to help you manage your rentals, built for real estate investors just like us. Shook offers lightning-fast ACH payments. I just got a few properties set up with Shook, and I'm getting paid way faster than my old service. They can also do custom things, like if you need to pay a manager a percentage, they can take care of that. The staff at Shook, Oliver, and the team are just so awesome to work with, and we want to thank Shook for sponsoring the podcast. At $5 per unit per month, it's totally worth checking out shookrentals.com to book a live demo. In the show notes, we're also offering a discount of 20%. Use the code TCREI20. Thank you. One of the hardest parts of investing is finding a solid property manager. I've worked with plenty over the years. Some are better than others. Earlier this year, I did a 10-unit deal where John and his team at RPM Viking handled the management for our mutual out-of-state client. They were professional, they were responsive, they delivered exactly as promised. Now they are my #1 management referral, and I'm proud to have them supporting the show. Learn more at rpmviking.com. Use the code TCREI300 for $300 off maintenance services when you sign up with RPM Viking as your property manager. Thanks for sponsoring the show. Investors, if a deal gets messy, call Network Title. They can handle the BRRRR, the 1031, mixed use, commercial, whatever it takes, so you can close on time. Working with Network Title is kind of like having another personal assistant. That's how on the ball these people are. Network Title, complex deals made simple. Link in the show notes.
you can get down in that like at 175, 200, 225 range very easily. But when you're talking about, a move up buyer type home,
this is the difference.
It's inflating even more. Yeah. Where we're seeing homes that used to be $400 or $500 a square foot, they're $600, $700, $800 a square foot now. Yeah. So
cool. Well, what's up, Jordan? Thanks for doing the pod, man. We've never met before, so welcome to my home. Nice to meet you.
Yeah, this is very, very good space. Thanks for having me.
Yeah, of course.
It's a great setup.
So you're an insurance guy, and there's some sort of, you guys work together,
Yeah,
correct?
absolutely. Yeah. Jordan works for a insurance broker that's a large national company, but a broker. So they have a good combination of a very wide range of products and like you call them carriers, right? Which is what they kind of call the different insurance companies. And so he can still shop price, but he has a wide range compared to a lot of other brokers.
Yeah.
Right? Isn't that fair to say? Some real good technology?
Yeah, really good technology that allows us to be pretty nimble in the way that we operate and the number of companies that we operate with. I would just say maybe two unique things about us is our company allows us to write lines in all 50 states if you have interest in doing that. And then we operate with, the last time I looked, 280 carriers. So, you go to most brokers and
they're like 30, right?
Correct.
50.
Yeah.
We hear a lot of 50.
Yeah, 10, 20, 30, 40, whatever it may be. 280 is an unusual number. So.
And to be completely, transparent, there's 6 that matter 90% of the time.
Correct.
But on that 10% of the time, 194 matter.
Yeah, right? It makes a huge difference. Yeah, my roof's sold, my house is beat up, I got claims, I got this, I got that. The other 200 of them make a world of difference. So, and especially, we've talked about it, the investing world, the fix and flips, the unique properties. So,
yeah. Yeah, there's a lot of interesting things I want to get into that cover insurance, and I'm going to say this in the opening, but I want everyone to know, like, this is the episode that you need to hear. Whether you want to hear it or not, this is the one you need to hear, so keep listening. But before we get into that, Jordan, you did have some real estate investing experience. That's not why I have you on, but, like, before we started, you were kind of telling me about it. So will you share with us, like, your non-insurance real estate investing journey, what you guys did?
So we had a strip center up in kind of Blaine, Circle Pines area for a number of years. Got out of it a little bit after COVID, and I mean it was a great experience. And will we do that again? Most likely at some point. It just, with where our business is at, family's at right now, it's not our core focus. But I would say real estate is really, really cool. It is a great opportunity to learn things, to grow, to test yourself, but also to earn additional income, invest and grow the assets that you have. I would say common misconception is that real estate is truly this passive thing that people talk about. It is certainly not that. You're getting the calls on a.
Is that why you kind of exited?
It was just time. We got it at a good price at the right time, and it was kind of going through that cycle of we're either going to make some changes to the property, the price per square foot, and get very labor intensive with that property, or go and move on from it. And it just made sense from a logistics standpoint to move on from it. We live on the other side of town, and we were self-managing it.
When you say we, are you talking you and your wife, or is there a bigger partnership group, or what does this look like?
Yeah, it's just my family. Yeah, just us. So
okay,
yeah.
Speaking of your family, I'm not sure I know how to properly pronounce your last name. Could
Porteous.
You pronounce your name for us?
Yeah, Porteous.
Jordan,
you want to
Porteous.
spell that for us?
Yeah, Porteous.
I mean, I know everyone listening to this already knows you, but
no, it's a good question. Everybody's like poor, and they're like Porteous. Can you finish it for me? I'm hesitating, but yeah, so it's Porteous. But so it was time to just move on from that, and I would say everybody thinks real estate is passive, is easy. They see the fruits of participating in it, especially those who have been doing it for a long time, but also at the same time you're getting the phone calls on a Friday or Saturday night at 8 p.m. because you have a vacant space and the thermostat died and the fire suppression system froze, thawed, busted the sprinkler off the end of it, and there's 2 inches of standing water, and it's leaking into other tenant spaces and things of that sort. So
what the heck did your insurance agent say?
Yeah, he was like, dang it, oh man, we maybe shouldn't have insured this guy. So
I had a good one last week. As long as we're complaining about being landlords.
Yeah.
Text from tenant. Thursday night, water's coming in through our ceiling. Mm-hmm. And it's either ice dams or it's a lack of proper ventilation combined with an extreme temperature shift.
Yeah.
The restoration guy said he's been to like 16 of these today.
Really?
So probably maybe somebody listening, I got a great referral. Bob could really take care of you if you're going through this right now. For restoration. Yeah, he really saved my butt. But yeah, it happens. And hey, let me ask you this. This is an insurance question. Mm-hmm. The tenants, we're pretty sure they don't have renter's insurance because we asked them so many times and they just ignored us for like a week. And now they're claiming that they do have renter's insurance. However, their renter's insurance doesn't cover this sort of thing. Mm-hmm. Is that plausible that a renter's insurance product wouldn't cover like a sudden, their ceiling caved in is what happened. Mm-hmm. And now they have to relocate and blah, blah, blah. Mm-hmm. Do you know much about renter's insurance?
Yeah. In terms of like, would it cover the repairs to your property? You're saying their displacement.
Tenant's displacement, if their couch is ruined, that kind of thing.
Yeah. So it all, and this is the answer that I would say I give on a lot of this stuff, not knowing the full situation, is it depends. It will always depend on where the loss originated from. So if it was driven by the tenants, or there is a circumstance that was maybe considered an act of God, a lot of times that may be covered. If it was maybe wear and tear on the home, if it was something sudden and accidental that was not on their onus as the tenant, sometimes that may go back on the property owner or manager.
Like an ice dam would maybe be considered improper maintenance, or would it be
it depends how. Yeah,
would it be weather? I mean,
it could be both.
You could argue
it could be either or. That one is, to be honest, it depends. So
for context, it's a brand new roof.
No.
Yeah.
No. Did you get it replaced from all the hailstorms?
You know what? I help with this property. It's like one of the lingering management contracts that I still have.
Oh, okay,
I used to have some properties under management, and this is my last one. I'm actually moving on to John Scribante, friend of the pod. Okay. Anyways, just an aside, thought you might. It sounds hard to believe to me if something is sudden, and I don't know if you consider condensation an act of God or not. But it's not their fault. It's not our fault. Just kind of it's similar to like a tree falling on the home.
Totally.
I don't know what renter's insurance would be for if not this circumstance.
I think we should talk about that in the flow of it, but I think that's actually should be absolutely a topic, because for landlords they should know, right? Like,
yeah.
What does it cover? Don't think everything's covered, right?
Totally.
But I think something that's kind of relevant to this, just in case you ever have this happen. We used to have a house in East St. Paul that had poor insulation, right? Mm. And during the mortgage crash, I was broker than broke, guys. I mean, like I made $30,000 one year, family of 5, right? Like could not have been more broke. And so we qualified for some sort of energy assistance program. They came in and insulated our house. Oh, wow. And we immediately got ice dams after that. And we had ice dams for the rest of the time we owned it. Because they insulated it just good enough that the ice would then stay on the roof, and it wouldn't melt off. And so
your poor insulation was melting the ice dams.
Was melting the ice dams, yeah. So the combination of the style of my roof, which my home inspector called a Frank Lloyd, how do you call it? Frank Lloyd wrong instead of Frank Lloyd Wright house. He's like, this roof design is awful. It looks really cool, but you're going to have ice dams, right? And I'm like I never had ice dams until I got proper insulation. But I just think it's kind of nice to know that like sometimes there is a consequence to this. So if you're going to do it, I'm sure there was a way to do this so that they didn't get ice, right? My guess is they insulated just good enough that it caused ice, but but not good enough, like that no ice formed at all.
Interesting.
Right? Because a partial thaw will, create water, but then it refreezes, right? Mm-hmm. A full thaw just burns it off, which is what we did have, right? Mm-hmm. And true insulation needed to be so much that it was just always looked like snow. on the roof, right? So you can kind of go halfway and do it wrong, is I guess my point. Anyway, just I think a little house maintenance thing to know.
Does a modern home come with ice dam protection? Like, is there heat tape? Is that standard code now?
To be honest, I don't know. That wouldn't surprise me if there's something like that. I know the air tightness and from an insulation standpoint, homes are built far different than they were, 25, 50, 100 years ago. I'm not sure.
Yeah. There's a terminology that's kind of like unofficial in the business. They call it a hot roof or a cold roof. Most roofs are cold roofs, meaning that, like, again, the ice will stay or the snow will stay like snow. A hot roof is different. Codes are different. If you're going to make a hot roof, that's when you insulate, like when you finish a third floor attic. Then you have to insulate it a certain way, and you have to have air channels and stuff like that. You don't have the air channels if you don't have insulation on the roof. Like, basically, you don't insulate roofs, you insulate below, right? That's a cold roof. Once you start insulating the roof, you have to do it different, or you run into other problems.
And we're dealing with mostly 100-year-old properties as multifamily landlords, and they're all cold roofs.
Yeah. And there is something called ice and water, which is like a black, I guess I would say like asphalt-looking sheathing. I don't know exactly, but that's put on the around the edges of all the roofs and in the valleys usually. So anyway,
roofs. So we were saying, so to wrap up this deal, what made you purchase the strip mall? Like, where did you find the deal? Do you mind sharing what you paid for it? What year was this approximately?
Yeah, some of that I'm maybe not comfortable sharing, but I'll say it was just price driven. We were not planning on involved in that. We didn't, to be honest, we didn't have really hardly any prior investing experience outside of like some condo stuff in St. Paul. It was purely time, place, price.
And you just said you want what for it, and you said okay, sold.
Without getting into too much detail, it was somebody who had owned the property for a long time. They had some change in family situation, and it just they were like, hey, I'm gonna get rid of this regardless. Do you guys want it? Yeah. And so it was something like that, and it made sense. And it was kind of like we were talking before, it was like a win-win for, for everybody. It made it easy for them. It was good for us. It was a lot of work, but it ended up being a good thing.
Cool. So, what sort of tenants did you have? Like, what was the...
It was a pretty good mix. There was, at one time, and this is the space that had the pipe freeze, but there was a convenience store that was then vacant for a little bit, and then that's when the incident happened with the water. But we had a convenience store, there was a restaurant, and then the rest of it was mixed. It was chiropractor, dentist, daycare. There was another restaurant, and then there was a small credit union that was a detached building. Yeah.
How many units were there total?
I have to think because we changed it. Maybe 15.
Okay.
Yeah.
That sounds kind of large, right?
Yeah, it was good size. Yeah, it was good size. There was really good parking. It was a good location.
We brought you here to talk about your strip mall, by the way.
Yes, by the way. Yeah. Actually, forget insurance. We'll spend the last 2 minutes on that. And then that'll be the part where everybody shuts the podcast off on the insurance. So, yeah.
Cool.
Awesome, man.
Check.
Yeah,
talking about the strip mall.
Well, I mean, the main reason I want to talk is like this has become, it's a real thing. Insurance is a real consideration for investors right now. Like, it hadn't been for years. When I started in the business, we used to quote $50 a month for insurance, and now I quote typically $250 to $300 depending on the property. Occasionally, I quote as low as $200. As an initial estimate. Oh, you want to buy a house? That's $250.
Thank you for updating that from $50 a month, because you'd be surprised what we see sometimes.
How many lenders are like, well, I'll see some lenders who maybe don't do as much business as Tim. Yeah, quoting like, I don't know, 2020 numbers.
Yeah, totally.
Yeah.
And then it doesn't go through underwriting. Okay, this only happened once, but it was a big deal.
I've run into it. Where someone will send me a quote, and they're, it's like an out-of-state lender or like one of those telemarketing lenders where, from one of the big companies, and I'll look at it and like, they have $100 a month for insurance in here.
Yeah.
Like, they're, there's no way, your payments can be 100 to 150 higher than whatever they show here.
Yep.
Yeah.
Well, we analyze a lot of deals with clients and for ourselves, and it was an afterthought, and it was pretty easy to calculate for I guess I started doing this a while ago, and now it's to the point where well, why don't we contact the insurance broker maybe even before we go to the showing, just to see if this is going to pencil out.
Yeah.
So what up with that?
Yeah. There's a lot of things that play into it. And we were talking a little bit about some of them in a short summary. It is inflation of labor and material costs, because the cost to reconstruct or repair the properties that are being insured is more expensive than it was 5 years ago. You look at any, single family duplex, fourplex, apartment building, strip center, whatever it may be. If God forbid one of those structures completely burned to the ground, it is substantially more expensive to rebuild it today than it was, 3 years ago, 5 years ago, pre-COVID. In addition to that, during COVID, there was this period of time, particularly in the residential market, where people were home more frequently. And so this affected auto insurance too. People weren't driving as much for a period of time, but homes were unattended for much shorter periods of time because people weren't going to work as much. They were working from home. And then money got really cheap for a period of time. So a lot of companies were in grow mode, and there wasn't as many claims being filed. And then it all flipped after COVID, where we know cost of labor went up.
So you're saying they're in grow mode, so they were offering cheaper insurance to be more competitive?
Yeah,
that
because
kind of
we
thing?
had come out of a season from maybe 2015 to 2019 where claim numbers were pretty predictable, and storms were kind of just tracking with the historical average. Hey, there's going to be, roughly this amount of, catastrophic, hailstorms and other events throughout the year, both in Minnesota and across the country. Now, insurance here is primarily really just affected by insurance here. It's primarily on a state-to-state basis, which is a somewhat of a common misconception that, hey, is what's going on in Florida, Texas, California affecting me here? Generally speaking, no.
With the exception of material costs, I would think, right?
And correct.
Fuel costs that drive material costs, right?
Correct. Yes, the material costs will affect here, but the claims, for example, because hey, I know there's all these hurricanes in Florida or these other things, but here, what happened after COVID is we had 3 years in a row of record frequency of claims, primarily due to hail, where it was 2, 3, 4, 5 times what was historically average for the last 40 years. So that alone, hey, we are paying 3 times, 4 times, 5 times the amount of claims. A lot of companies were underwater just on that alone. And then you factor in the properties that were being insured are now costing 25, 50, 75% or more in addition to what they were insured for previously to repair or rebuild them. And so as a result of that, more claims being filed, the claims are much more expensive than they used to be. The prices had to come up as a result of that.
So it's Minnesota claim activity that for the most part influences or Minnesota premium cost.
Yeah, effectively. Yeah, because if you look at, the last 40 years, each year there was, a couple of events that would trigger kind of catastrophic losses where people were filing claims for their roofs or their siding or their windows, overnight freezes, things like that. And then the last few years, it's been substantially more. And as a result of that, just the claims frequency is up so much. People used to go 20 years, 30 years without filing a claim. And now it seems like the sentiment is changed on that quite a bit. And some of that's technology and availability. Some of that's just we've had crazy weather, and it's just a mix of things.
What about the exterior companies? Like, I mean, I think roofers get a bad rep. Is it rap or rep? Bad
I think
rap?
it's rap. I hear rap. I don't know.
Because rep makes more sense. Reputation.
It does actually, but
Okay.
I think it's bad rap. I don't know. Do you know?
I don't know.
Okay.
Rep
Bad
for
rap?
reputation, rap, like rap sheet. I don't know.
It could be a rap sheet. Anyways,
It's whatever you want it
roofers
to be today.
Get a bad rap. And there is some pretty egregious behavior in that sector. Mm-hmm. We all know it. And I think it's a common thing to give that industry some of the blame because I'm not a roofer. I'm not an architect. Like a couple little dimples in a few shingles or like a flashing has like a dimple in it and now you need a new roof. What do you think about that? I mean, like in general, somebody probably could do a study and like quantify the actual effects of that. by looking at these claims and how many of them actually, I don't know who's going to make that determination whether you need a new roof or not, but a lot of people are just kind of cashing in.
Yeah, totally. I would say it's like anything else. There are people who are operating in a way that if it was on the front page of the newspaper, they'd be proud of, and everybody would be, satisfied with what they're doing. And then there's people that are doing the exact opposite of that. If, hey, everybody was looking at what they're doing and it was on the front page of the newspaper, it'd be like, oh gosh, that was, maybe not totally above board, or you're just, this is very, dollar driven. This is not, serving the consumer and doing the right thing necessarily. And so I think it just depends on who you would ask. Because we've worked with different companies here and there, just from an experience standpoint with clients, where we're amazed by their service. They do the right thing. They, their opinions line up with ours, even when I wouldn't think it would, or even when it's not in their best interest. And there's some other companies where it's like, hey, you gave some advice here that was clearly slated in your best interest and not maybe subjective to what was actually going on.
Maybe I should, and to frame, let me just frame the question a little bit differently, because I don't want to put you on the spot to ethically judge the roofing industry. That was not my intention. But you have matching policies, right? And you have a huge economy driven by the fact that, we could do a little repair, but it's not going to look perfect, so now you get a whole new roof. So ethics aside, if with a time machine, if you could switch things up a bit, would premiums be cheaper?
For sure. 100%.
Right.
And some of it's unavoidable with the weather. Some of it's unavoidable with the larger, macroeconomics of labor and material costs, certainly. But the frequency at which people are, making claims, and there be pretty large ones, is so different than what it used to be. And part of that is what's gone on in the last few years. Part of it is, hey, I got door knocked. Hey, the technology where 15, 20 years ago, a storm came through, somebody called you, or maybe you went and knocked on the door and said, hey, can I look on your roof? Which is totally understandable. Now you can go back and look and say, hey, I can see that there was a storm here 3 months ago or 6 months ago or a year ago where there was hail that was big enough to cause damage to a home. And, let me go look on all the homes in that area and retroactively file a claim for something that happened 6 months ago.
Right. And so for those of you who don't know, gosh, is there a website that he can pull up to show what it looks like? I've seen these. It's a little bit like a heat map or like a weather radar, right? It kind of has that kind of view to it. And the roofing companies have access to this. So they know, like, there was an event in this neighborhood, right?
Go to Texas. They have great hail down there.
Do they? Okay.
Oh, my goodness, yeah. Texas and Oklahoma.
So
it's gonna make me purchase.
Oh yeah.
But you can see here though, right? There's companies that have these. They can go and they can say hail map in this area. There's enough things. They can look at the size of the roofs and the expense of the homes, and they can say, I'm going to go to this neighborhood because this neighborhood will be extremely profitable. All the roofs are 20,000 and up. Right, they might even be $40,000 roofs. There is hail, and then the insurance companies do also validate by this, right? So they'll look at it, and first thing they do is go to these.
Yep.
If there was no hail event, there's no issue. But once there is a hail event, they really can't argue in court there wasn't. So now it's just a matter: does this house have enough, right?
Yep. Totally.
And
maybe try images. I wonder if there'll be anything.
Oh yeah, good call.
If there'll be anything on there of like a sample one. But right there, that second picture. That's kind of what a lot of those maps look like from what I've seen. Is it's effectively a weather radar, and then it highlights an area of, hey, there was enough hail here to cause damage, things like that. So which is technology is awesome, but also that has driven the cost up a lot. Just the ability to file claims. I mean, 20 years ago you'd go outside and go, is my roof still attached? Is my siding still attached? Versus now it's like, well, was there enough hail here to cause damage? Well, let's see.
And we're really caught in the cycle because we're going to talk about age roofs later. But you're in this cycle now where I look at it and I go, my gosh, before I'd be okay with a roof that was maybe a little bit minorly damaged, but still going to last another 15 years. I might not want to do anything. But now if my roof becomes over 15 years old, I got all kinds of issues. So if it's 7 years old and I can get a new roof on it for my deductible, I might want to consider it solely for the fact that if I don't, the insurance companies are going to penalize me, right? So there's now a vicious cycle, that didn't exist until like the last like 24 months or less, maybe even last 12 months.
Definitely, I would say pre-COVID, that was not how it was. Yeah. And I don't know necessarily exactly what changed it, because it all seems like it was part technology. It all seems like it was part inflation, labor, materials, all of that. And just like the ability and the access, how easy it is to file a claim now. It's, hey, go on your phone. 90 seconds to open up a claim. You get the adjuster's information and they're talking with your contractor. It's like, that was pretty easy versus, a lot of paperwork 10, 15 years ago.
There's another technology that roofers use that's a lot like it's a lot like Google Earth or something similar to that, where they can see the size of the roof and they can actually know how much material they need. They can measure
pretty close,
close enough to know, like, because there's obviously a variance, right? Like they order 10% over or whatever, but they could look at Adam's house on Google Maps and just by scale, they can know exactly how big the roof is and how many squares they need, which is how they determine how much material they need. So they can kind of go in and say these are whatever. I don't even know what's appropriate, but like a 16 square roof and it had hail and blah blah blah, right? So they can get really precise on how they want to target, and that leads to all those claims you're talking about.
Yeah, I was trying to narrow down like approximately, because we're all guilty of this, talking with a client. I mean, not anymore, but 5 years ago, certainly. Like, maybe 50% of roofs end up being paid for by insurance companies when it comes to replacement. I don't know if you know that stat. ChatGPT is telling us in many regions 30 to 40%. Some people say 1 in 3, perhaps up to 50%. So it's a lot of dough.
Yeah. So 1 in 3 to 1 in 2 are covered, and then that basically means your insurance has to pay for a roof every 7-8 years, right?
Yeah, I mean, pretty frequently, and especially, that's probably a nationwide stat. There's probably some areas where it's way less than that. They don't get a lot of storm activity, but places like here, I would not be surprised terribly if it's quite a bit higher than that. It might even be 60-70% or more. So.
There's so many like little nuanced topics we can go into, but let's talk about how this specifically, let's stay on roofs here and kind of, wrap this part, but like, let's talk about how everything we just talked about affects deductibles now, because the deductibles I see on roofs are completely different, and the coverage. Let's talk deductible and coverage. Yeah. Because it's way different than it was a couple years ago, and a lot of people might not know that. Yeah. And they might even be getting the changes and not be aware, right?
Yeah, definitely. We are seeing a lot of that, where we get a lot of calls where somebody says, "Hey, I was with this company and I didn't really get clear communication, and then this happened and I didn't have a good experience." So it does seem like that's happening a lot, where people are missing the communication. But effectively, what is taking place is 5-10 years ago, you would see a wide variance, and you could have $100,000 house, you could have $1 million house, and their deductibles could be very different in relation to the size and value of the home. It could be $1,000, could be $5,000, could be 10. Sometimes the more expensive house would have a lower deductible, things of that sort. What has happened through this to offset some of the costs of just the insurance companies not wanting to continually raise the rates is they have to balance the deductible, the coverage, and what they're charging. Yeah. And so what they've done is gone to a percentage-based deductible, primarily for wind and hail, with many companies. So 1% of the insured value of the home. You have a $500,000 house, your deductible's $5,000 before the coverage kicks in. That is becoming much more common here.
Yeah, and I want to point out that like Americans are so bad. I hear this, they're so bad with percentages. Yeah. They hear 1% and they think low deductible.
Yeah.
But what you just said is this is not 1% of $1. This is 1% of a $500,000.
Yep.
Right.
Yep.
And that becomes a large figure, which is 5,000.
Yep.
That same deductible when I started in the business was probably $1,000. We had $500 deductibles for sure.
Yep.
Most people probably chose 1,000. And for the last like decade or so, I've been encouraging people to get $2,500 deductibles because they're all going for 1,000. I'm like, your house doesn't move that often. You should get a $2,500 deductible. Now, a cheap deductible is somewhere close to $500,000, or I'm sorry, 5,000.
Yep.
Because I'm seeing a lot of 2%ers now.
Again, especially in a rental market.
Small.
Yeah.
Seems like, it's only 2. It's the number's
percent,
2, right? Yeah. But no, you're talking 12 grand or whatever.
Yeah.
I just saw one the other day. I think it was, 8,000, right? It was 2% on 400 grand.
Yep. Yeah. And that is becoming, I know we were talking about the rental market and real estate investing. That's becoming way more common in that market too, especially the older homes in Minneapolis and St. Paul. Even seeing 2% wouldn't hail. So
I went to max. I don't know if I'm doing the max deductible across the board, but I think I have 10,000 pretty much across the board.
Mine are I switched to 10,000 on everything.
Yeah.
I'm curious. I had this huge tree fall into my yard. It was my neighbor's tree, but Minnesota law, it's still my problem. Ruined my fence, messed up a bunch of landscaping, a sprinkler head, some cool statues that I have in the garden, and I was advised.
You're a statue owner?
Very cool.
They came with the house. It was one of those naked ladies without arms,
It's all good. I'm
pretty
just
cool.
totally teasing you.
Now she doesn't have a head.
You're rich when you own statues.
I'm going to cut that.
I'm just teasing you, man.
Anyway, that does sound now that I think about it, it sounds ridiculous.
It's all good. No, it's totally fun.
I'm offended, Tim.
You're offended?
My insurance person, and then I heard this reiterated from Bob. Let me know if you want Bob's number. He's great. The restoration guy. That we're being coached not to file. Unless maybe it's triple deductible damage. Now maybe, with a 10,000 deductible, maybe I'm not going to wait till triple, but are insurance companies faster now to raise premiums? Are we being punished more heavily for claims these days?
Yeah, good. Yeah, that's a good question. What I would always say is, because the sentiment on this has changed so much, is what the policies were originally designed and intended for was to provide coverage in the event something takes place that in any reasonable situation, somebody would normally not be able to take care of that themselves. Where you could really set up your insurance situation to file claims for almost anything nowadays, if you truly, really wanted to. Now, you're going to pay for it. In terms of filing a claim, the rule of does it need to be double or triple, that's probably a good rule somewhere in there. It depends. Sometimes the threshold needs to be more, sometimes it needs to be less. Certainly depends what the claim is for. Something
in the occupancy of the house.
Totally. The occupancy of the house, and then what the claim is for. Something weather related. If it was a large weather event, is typically not going to be viewed the same way as, hey, I'm sorry, I accidentally started a kitchen fire. My bad. So those will definitely have different effects.
Yeah. So let's talk about the occupancy, real quick. People might not know law.
Okay, yeah, you go. I had a very relevant
go
aside.
Ahead.
So I've heard so many roofers say over the years that it's illegal to be punished if you're filing on an act of God claim. Maybe I'm butchering
but this is going exactly to the point I was going to make, because most people don't know this. There's a law about this. Go ahead, Jordan.
So effectively, if there's a threshold that if there is an incident that causes enough claim activity and claims to be paid out in an area that's considered a catastrophic loss, act of God, something that's out of your control. Typically, it's related to storm damage, particularly in our area. Those claims are viewed very differently. That is correct. Than, hey, I had I left the bathtub on, the drain was plugged, and it just went everywhere in the house, water everywhere, or I started a kitchen fire or something of that sort. It's not that they don't show up on your claims record or they have absolutely zero effect. If you continue to file claims like that, eventually it will make changes to your insurability and the costs and things like that, certainly with some companies, usually with quite a bit of variance.
But also it matters on occupancy. So can you talk to that part of it? Like there is a...
Yeah.
If you live in the house, there's different laws, right, on what they can do in terms of dropping you?
So different companies, what it's related to is how they underwrite their products, essentially. Some companies on primary homes are going to be less sensitive to the claim. Some companies will be more. In the rental market, same thing. Some companies will be more sensitive. Some companies will be less sensitive. It really just depends on who you're working with, where there are some companies that, we have clients who have had, a pretty good number of claims with on their rental properties and no issues. You take those same number of claims, you go to a primary home, issues right away, and then vice versa. There are companies that are actually the other way around.
I was under the impression, so maybe I'm wrong, I was under the impression that active God on a primary, they can't drop you for one claim, but on a by state law, but on a investment property, there was no protection, meaning that like you could make a legitimate claim and they could still drop you.
Yeah, that may be true.
Okay.
I'd have to
maybe something that didn't. Okay.
Yeah, no,
I'm not 100% sure that, but that's something I was.
That wouldn't surprise me.
Under the impression of.
Yeah, that wouldn't surprise me if that was the case. And to be honest, usually, and this is totally anecdotal. This is not data. This is just, my own opinion and feeling the situation. From what I see most of the time when people have a singular hail claim, it's, especially if you were getting a roof or siding or windows replaced, all in that, it's very rare that somebody's going to have a substantial negative impact on a primary home or even an investment property. You will probably have some difference, but if you had a $50,000 or $75,000 claim, and your insurance goes up, 25% for a year or two, it's probably not a big, they're probably going to go, oh yeah, that makes sense. I just got a $50,000 or $75,000 check and they want an extra, $50 a month for 2 years. So
I'd take that deal.
Yeah, for sure.
Totally.
For sure. So, okay, we didn't completely finish the roof stuff. So they changed the deductibles to usually a percentage, and this is wind and hail.
Yeah, and the reason they're doing that is insurance likes predictability. So from the standpoint of if this is a smaller house, you have a smaller deductible, 1% on 100,000 is $1,000. You have $1 million house, it's $10,000. As the house gets bigger, your deductible gets bigger. As it gets smaller, it gets smaller. That is good for them to be able to predict their responsibility in the event something happens versus, hey, this $5 million house has a $2,000 deductible. That doesn't really make sense.
Yeah. Larger deductibles also discourage claims. So on some level, it should eliminate some of them, right?
For sure.
Because it's like, okay, the roof is barely damaged. I'm not going to pay $10,000 on my roof because it's barely damaged, right?
Totally.
What about coverage? And I guess let's talk about roofing and siding, right? Because I think there might be a difference on, a law change versus match and unmatched and all that kind of stuff. So can you?
Yeah. So the matching thing that comes up with the storm stuff is mainly related to if I have damage to one side of my house and not the other, and the material does not match, whether it is a different material altogether, the color, how it had to be installed, will my policy pay additional funds to replace what is on the other side of the house? The answer is it depends. Some policies will not. Some policies will pay some amount, and some policies will pay an unlimited amount.
But was there a time where they were forced to? On siding, or was it just common? Because there was a time where it was like really
probably
common,
more
right?
common. Yeah,
okay. It wasn't really a forced to thing.
It wasn't a forced to thing. I would say now, from what we see, I'd probably say, and that's one of there's 4 or 5 things that we always talk about. A couple of them are related to things like matching. A couple of them are related to like water damage, water and sewer backups, water seepage and leakage. The reason we talk about those in great detail is those are very often, if we look at a handful of policies, the most common claims that may or may not be covered depending on which policy that you choose. And so that is one of the things that we always talk about. My guess is, 20 years ago, it was probably just more common that it was included. As people started to use the insurance more, as it's gotten more expensive, some policies are electing to exclude that or give the insured the option of, do you want to pay X number of dollars a month to include this or not? And so that's something that we always talk about is, this company has it, this does not, or this is included here, here's how much it is. We think this is a good idea, because at the end of the day, if somebody wants to include it, we always think that that's a good idea, but everybody has a different feeling towards insurance. If, hey, I'm okay not having it, but I understand what goes along with that, that's totally fine. We recommend having it, but if you don't want it, that's okay.
And you're probably safer if you have a material that's not going to fade much, right? Like if you have a white house, you're probably safer not having a matching policy. But if you've got like a funky kind of like red or blue siding that's a little dark, that's going to fade over time, that's going to show up a lot more if you don't have this matching.
Totally, yeah, and definitely on like the type of material too. Like if
vinyl's is gonna fade more than like a
hardy. Just like and like the frequency at which that material is like changed, manufacturers changing the actual material, but and the likelihood that it would be damaged and things like that and need to be replaced. But yeah, so that's been changed. And then in terms of the roof piece is the hot topic right now. I feel like is my roof going to be covered? Is it not? And things about that. Do you have any questions about that, or I can just kind of just talk about it?
Well, I was going to ask, if I have a client buying a house with a 30-year-old 3-tab roof, and now we are still helping people buy homes like that, usually get some sort of seller credit or there's some sort of concession that goes along with it. But I talked to a woman the other day who was told that she just wouldn't be able to find insurance. You have how many? 235 carriers.
That's where the other 200 come in. Yeah, we were talking earlier where
it's not the top 6, right?
Yeah, it's not. Yeah, it's not the most common ones you see, but there are carriers that we have that now at a certain point, if you have a roof that's 50 years old, 75 years old, unless it's slate or something, it is hard to get 100% replacement costs on that. But in terms of a roof that is in good working condition, that's a standard shingle, it's not an issue getting coverage on the house. It's usually not that much more expensive. What it comes down to is they're not going to have a lot of options. It's kind of like, hey, this is what it is, or like, I know you really want to go with Nationwide, but this is going to be the company that you're going to go with. There's not going to be 10 companies that I show you that are going to be in the mix here. It's this, and it's going to cost about this, and usually it's not substantially more expensive. But
if you've got good credit and a
yes,
right? in a good claims history, right?
Yeah, and what happens where sometimes people will run into where it's a little bit more expensive is there are some circumstances where I don't have the most attractive insurance history to a carrier, and there's only one option. Because if we're looking at 280 companies, the chances we find one that's like, oh yeah, we'll insure this property for an amazing price compared to everybody else is very good. But when there's a couple companies that will insure it because you have a 30-year-old roof with 3-tab shingles, and that person maybe has characteristics that company doesn't like, that's the time where we see, hey, this might be more expensive. Instead of $200, $250 a month, $325, $350.
Yeah, so if you're a real estate investor out there who likes to speed, has gotten in some accidents and claimed 2 roof claims, and then you want to go buy a 30-year-old roof, don't be surprised if your policy is triple everyone else.
Wait,
Right?
does my driving
just call? Yeah, just give us a call.
Hold on a second. Does my driving history affect my home?
Well, when you get it into a nuanced situation, it would, right? Like, because here's how that would happen is you get in a situation where you only have a couple choices in carriers, right? So now you can't, and you have to bundle your policy to make it work, right?
Oh, sure.
Or you can't bundle because you have to stay with Progressive for your car because no one else is going to insure you on your car. But now you have to get a standalone landlord policy from I'm sorry, I can't even think of some of the more out there carriers. Whatever carrier really expensive, but will do anything. They're gonna jack it up, right? Because they don't have the bundle policy. You've got nothing behind you, and they're like the only people who would do it, right?
Yeah.
That's kind of how that happens, right?
That's exactly right. It's like, hey, we might have, let's say we have 2 carriers that do this, but this one requires your auto insurance and it's triple the price because of you driving record or something. this one doesn't care, but they're going to be more expensive. That's exactly how it happens as we go from 280 to 250, 200, 150, 100. Now all of a sudden we're looking at, 10 options, and, it just, sometimes it is what it is on those. So, but most of the time I would say it's, I'd say 80, 90% of the time we get into a situation like that. Somebody just wants to be told clear, concise information. Like, am I still covered? Is this okay? Okay, I understand it's not ideal. I'm going to be paying an extra $500 a year, maybe even more, but I'm okay with that because, this is the right investment or the right house for me. Okay. Most of the time in our experience, people can stomach that. So it usually hasn't been too much of an issue. There's been a couple of times where it was substantially more, and like we had to have a conversation about it. But for the most part, people understand. You just tell them like, hey, this is why. If this ever changes, it'll be different, and we'll move you somewhere else.
Yeah.
The hardest building I've ever sold to insure was a 6-unit with fuse boxes.
Mm-hmm.
That was just a real bear. And they had to go with, gosh, what was it called? For some reason, the term state fair is coming into my mind.
Was it the fair plan?
The fair plan. Yeah, the state fair plan. Yeah.
Okay.
Yeah.
What's up with that?
And I'm not going to do the proper explanation here. And we do work with them. We have a very, very small number of clients with them because usually it's very rare.
I've had a policy through once.
Yeah, it's very rare that we can't place somebody. But effectively what that is a state fund insurance that will guarantee somebody to be able to get some sort of coverage on a property. So
yeah,
because the state has some incentive to
it's effectively allowing somebody to, hey, if I had a unfortunate circumstance, here's where it would come in more commonly is, somebody lives in a house and maybe there's a hailstorm, maybe they had a fire, and like 6 months later they had a pipe burst in their house and it caused all this damage. Well, it's like, okay, I definitely need to file a claim for that. But because I just had 3 claims in a year, am I going to be darn near uninsurable with most places? A lot of agents would tell you the answer is yes. And so that is what that is designed for is, hey, if I can't go reasonably find insurance somewhere or it's 10 times the cost of what I was paying, that's what that's for.
Sure.
And it could have been because of where I was looking, but a long time ago, this is like early investing career. I had a vacant house.
Mm-hmm.
And vacant houses back then, I'm thinking like, I don't remember the year, so I don't want to say, but it was a long time ago. And the house didn't have siding on the outside of it. And there were a lot of things, right? No plumbing done and all this other stuff, right? And I had to get the state fair plan on that one. Mm-hmm. And a few things I remember about it. One is when you pay the premium, there is no refund. Like with any other insurance, there's laws. Like if I go through, let's say State Farm, and I pay and I have coverage to the 23rd of February, even if I had prepaid a year in advance, they have to give me 100% of my premium back to the 23rd of February, right? Like everything I get refunded. With this plan, you pay it and you don't get anything back. It's all ACV. Actual cash value, which we should talk about, high deductible and really poor coverage, but it gives you coverage.
Yeah, and it basically is a catch-all for you have a disaster situation, you're still covered.
Yeah.
You have the house burns to the ground, it's not going to be necessarily what you might have had previously, but it will give you something that will at least protect you to some degree.
And now if you're reasonable, you're probably going to get Foremost. When I was actually early on too, Foremost used to be really expensive. They actually have some really nice, attractive policies now.
Yeah.
For investors specifically,
Yeah.
And gosh, I had a Foremost policy way back in the day. Again, another high risk one.
Yeah.
I think it was the policy after the fair plan one on the same house. It was still vacant, and back then vacant was just impossible to insure, at least from what I could tell.
Yep.
And so
yeah,
I actually used to have my insurance license quite a long time ago, so I know some of this. And something you brought up, you said there's usually I think you said 4 things that you used to talk to people about.
Yeah.
I think we should mention that. But what I always used to tell people is if they basically on certain things, if they give you low coverage, there's a few things where they don't give you a lot of coverage and they try to charge you extra for. Mm-hmm. That's because they actually happen, right? Like if you're like sewer backup's the best example I can give.
Yeah.
Like anyone should look at increasing their sewer backup coverage because they actually make claims on that.
Yeah, it's top. Water claims are top 3 every single year, and a lot of them, a very large portion of our water and sewer backup. Sometimes it's, hey, there was work being done on the line down the road, and it seems like the pressure backup backed up into my house. And it's very hard to prove that that's what caused it, but I know it was. Maybe somebody put something down the drain, the line froze, the sewer got clogged, you had a sump pump shut off during a storm. It's very common.
Very common. And it's not that expensive to go from like 5,000 to 10,000.
Yeah, it's like $100 a year.
Yeah. So those are, so talk to us a little bit about like what are the 4 most common claims that people should actually be conscious of their coverage in that area, so they're getting good coverage, and maybe not worry about the stolen ring.
Yeah,
and the fur.
Totally.
I mean, the fur coverage is probably not that big of a deal for most of our listeners.
I would say the biggest thing, and I'll talk on the investment, I'll say in general, and then I'll talk on the investment market specifically and fix and flips a little bit, because there is some variance with that. In general, whether you are living in the house or you're renting it out or flipping the home, water coverage and how that is defined is always going to be one of the biggest variances.
Okay, so what are we talking here? Like how is defined?
So sudden and accidental, which would be, hey, I had a pipe burst in the house. That would be considered sudden and accidental. Is that covered? Is it partially covered, or is it fully covered up to the limit the house is insured? Let's say I have a $500,000 house. You can have a policy that covers that 0. You can have a policy that covers maybe 50% of the value of the house, or the whole thing. Now, in an occupied rental or a primary home, most of the time, it's the whole thing. It starts to change is where you start to get into fix and flips. It's a very big misconception. Most people have no idea about this, is if the home's vacant for more than 60 days, the vast majority of companies do not cover water damage whatsoever. So the amount of phone calls that we get where somebody goes, I was with somewhere for 5-10 years, I had a flip, I had a pipe burst, and I'm staring at a $100,000 bill. Often, like very often. So water would be a big one. The matching stuff that we talked about. How is hail damage handled? Is there cosmetic coverage? Is there matching coverage? How does my deductible play into that if it's different? And then, I mean, honestly, most of them are related to the water seepage and leakage, the sewer line, the water and sewer backup, and then the sudden and accidental stuff. So it's water, storm, and then honestly, I would say those are probably like 80% of it.
What about sewer line coverage aside from backups? Like a failure of
between the
sewer
house
line.
and the street.
Yeah.
I just started hearing about this in the last couple of years too. It was never a big deal before. So.
Yeah, so primary home insurance is very easy to include it on. Rental properties, it depends. Some companies do it, some companies won't. What you can do, just like a little tip for people, depending on where you live, is a lot of times you can call the utility company and they will actually allow you to pay some sort of policy through them to have that one item.
Columbia Heights has a program.
Yeah, and why some people will do that is, hey, I'm with this company for a home that I rent out, or maybe my company won't offer it even if I live in the house, and I'm getting a really good deal and I don't want to change. Well, you can call them and pay $10 a month for the coverage and not have to mess with your insurance for it.
Well, it's a huge consideration when you're buying a home. Spring market, people are waiving inspection. Most good agents, or you do a walkthrough with your contractor friend, and you can tell if a house needs an inspection or not, is my opinion.
Yep.
And it's that dang sewer line that you just don't know about. Yeah. So
if you've got a rental that has like a lot of females living in it, their sanitary personal items can be a problem if they flush them down the toilet.
Yeah,
a lot of people don't know that, but that's where we've had problems. We've had 2 backups because of that.
Yeah, I always tell people is like, because I never want to put the onus on someone of like, oh yeah, I'm gonna assume you're gonna do something to your own house, but it's like, hey, you have somebody come over to your house and they don't think about it and they just boom something down the drain that shouldn't go down there, and you got a problem pretty quick. And it's like, oof.
It's in our lease, actually, because I've had to wade through poopy water.
Oh, yeah.
I almost vomited, and so the guy, the guy who cleaned the sewer is like, I'm used to it, and he just cleaned it up for me, and it was like amazing.
Yeah.
But talk about something that wants to make you cry as a landlord, that's one of them.
Yeah.
Poop water sucks.
Yeah.
I think you're the one who coached me to do that. All my leases say... gosh, I forget the exact wording. I think I stole it from you, but let me know within 72 hours of move-in if any of the drains are not draining correctly. We'll take care of it. after that, any backup deemed caused by misuse shall be on the tenant.
Yep.
And,
Anyone who wants, by the way, on any lease item, if you want to just look us up on the website, Adam and I'd be happy to go through our leases with you and stuff like that. So that's not a problem.
Yeah.
But yeah, I've got a couple different water related ones, including letting water leaks go.
Yeah.
Jordan, I think that people don't really realize this. So can you tell us your biggest vacation story? Like family goes on vacation, comes back home. What's the story that comes to mind for you? There's got to be some good ones. Huh?
Yeah, I had somebody that this was before they were a client of ours, but I had somebody that had a house here. They had a house, I think it was in Florida, but regardless, they were gone for months at a time, and they had a neighbor that was checking on the house for them. And again, this is a long time before they were a client of ours, but they had a neighbor that was checking on the house for them, and they would come through, they would flush the toilets, they would look in the house, and turn on the showers, do a couple things. Well, so individual comes back after being gone for the whole winter, and they come in the house, and they're like, something seems off in here. And they're looking around the house, and they hear something running, and they go in the basement, and the shower in the basement had been on for like 2 weeks from when the last time the person was there, because they turn all the water on, and they forgot
turned it
that
on,
one.
Kind of walked away to flush the toilet or something, and never came back.
They forgot that one, and so it was just running for hot water running for like a couple weeks, and it was there's moisture in the bathroom and all over the house, and it was bad. Yeah. So that would probably be one. Unattended houses, it's almost always water related. There's a leak somewhere that goes unattended, which is why the fix and flips is very frequent. They don't cover water.
Yeah, I thought maybe you were going to go with the refrigerator one, because the one I'm most familiar with is some version of a refrigerator that has a ice and water maker in the door, where the mechanism that stops the water from coming out fails, and it just opens up and water pours out, and you're on vacation.
Wow.
And you're gone for like, let's say, a week.
Wow.
And it's Paul Davis, the Paul Davis Restoration Company. Mm-hmm. They had pictures back when we had to do continuing ed as a PNC agent, and they had pictures of houses that had just flooded, like it was like a swimming pool, because if you leave a constant stream of water on for long enough, in an old house that doesn't have a proper drain and everything.
Totally. Yeah, it's this actually just made me think of that. My wife and I, and this has happened to us twice. When my wife was in college, we lived in Bloomington, and we had a house at the time that we were in South Dakota, and we came back. I think it was Christmas time, and we walked into the house, and like the fire alarm or some detector was going off. Like, what the heck is going on? And I think the thermostat had died, and there was water everywhere in the kitchen, and the refrigerator line had burst. Not what you were talking about, but the line behind the fridge.
Yeah.
And there was a ton of water in there, but honestly, it could not have been going for more than an hour. And so luckily, like, the whole house is not filled up with bath water, and this just made me think of it, because we had that happen again, maybe in a different house, maybe 3-4 years after that. We were in South Dakota. We came home after Christmas. We opened the door, and we hear the water running. It was the same exact thing. The line had gotten frozen and broke or something, and it maybe had been going for 30 minutes and obviously caused quite a bit of damage. But the water thing is just it's a common thing.
It's going to sound weird, but my wife was also a PNC agent, so now when we go on long vacations, we go down and shut off the main water.
Smart.
In the house.
That's really smart.
And if it's a long trip, we were a little more lazy on this, but we'll just open up one of the faucets to drain the system, so there isn't water in the system.
Yeah.
I'll just open up a faucet and drain it all the way down, flush a couple of toilets. So that,
listing agents in the winter.
Yeah.
Maybe do this if you got something sitting for a bit.
And actually, I didn't want to ruin the flow earlier, but you guys were talking about problems in rentals. And just 2 weeks ago, we had I had someone go look at a property of ours for rent without me being there because I just couldn't be. And I actually know the guy and I trust him. So I'm like, oh, just go look. Here's a lockbox. He came in. He's like, Timmy, there's water flowing through the doorway. And I'm like, the doorway? Yeah, he's like, the doorway of the bathroom. So we thought a pipe had burst or something, right? Yeah. Well, it turns out my wife started calling the tenant above and, hey, do you see any signs? And she's like, oh, we just got back. Let's look. And the tenant above's daughter had turned on the water to like wash her hands or something, never shut it off, and the sink filled and overflowed. And like if I hadn't had that guy, it probably was only doing that for like, let's say 30 minutes or so. Yeah, it wasn't much damage at all because it took a while for everything to fill, and who knows, it might not even been 30 minutes, but it's just, it can happen that fast.
Quick. Yeah, totally. Yeah, we've had some interesting ones like
water's dangerous. So
I got a few quick questions.
Sure.
Any carriers that you really like that are doing like innovative things right now in the world? And then speak a little bit about short-term rental coverage and how that's changed over the years.
Yeah. It changes from year to year because realistically the people at carriers change and how they operate changes a little bit as they shrink, as they grow. What I always tell people, most companies in the market, like even though we have 280 companies, like we're pretty selective about who we work with. Like we will roll a carrier off if we don't think that they're up to the standard that we want, and then as well as like we'll refuse to work with some. In terms of what I always tell people is if you go and you look up the AM Best rating of a company and they have a superior rating, something that is A-, A+, however the rating scale goes, 80% of those companies are going to be relatively similar experience if the policy is set up correctly. So that's number one. There will be 10% that are in a season of being very difficult to work with, and there will be 10% that are amazing to work with almost without exception. In the residential market, probably the names that come to mind, Chubb, AIG, Pure, Cincinnati, those are the four that are always... their reputation is based on we do everything we can to put our best foot forward for the insured no matter what. And outside... Does
the consumer pay for that, so to speak?
In some cases, yes. In some cases, their policies will certainly be more expensive to insure the same thing, but not always. Typically, they are insuring nicer homes. And so if you go to, any other company, not picking on, let's say, Nationwide, we put a policy through Nationwide, we put a policy through one of them, sometimes it's cheaper through them because those
they're used to it, right? We talked about this.
Yes, yes. Because you want to make sure that you're aligning with a company that is used to insuring what is being covered. You don't want to be with a company that, hey, this company primarily insures homes that are $400,000 and this is a $5 million house. It's usually the policy is not going to reflect what you need in that, and usually the experience is not, and vice versa. A company that kind of will take a rental property or a fix and flip versus a company where, hey, we've put 500 fix and flips with this company in the last year. We know how they work. They're solid. They're reliable. They're not going to be nitpicky on the things that, an investor doesn't want to deal with. So.
And then anything on short-term rentals? Because I remember searching for short-term rental insurance in like 2016. Mm-hmm. And there was one company, they were like a British name. Proper. Yeah. They were the only ones doing it, maybe, at the time. And now it seems like it's more widespread.
Yeah. So there are companies that Proper is very similar to Chubb, AIG, Pure, et cetera, in the short-term investment space, where their policy is as comprehensive as it possibly could be. And you will pay for that, and that will never be a price comparison with them. It will almost always, it will always be more expensive with them.
Proper was super expensive.
Yes. And so there are a lot of companies now that do the short-term rentals, have no problem with it, more than there were 10, 15 years ago, for sure. Proper is just, hey, if you are less sensitive to price, this is just totally focused of, I really care about this house. This is this is a thing that I do, but it's less of an investment for profitability. That is the route some clients go. We have clients that love them and work with them, and the cost doesn't matter. To be honest, most people typically prefer that we present them a route that's, much less in price. So, but we love Proper, and we love the way they do things, and they're fantastic.
What considerations should people have in covering a short-term rental? Like, for example, if you don't have short-term rental coverage and you just get like a rental policy coverage because you are trying to get away with something, what are you giving up?
Having a hiccup when there's a claim, and having or just in general, if they find out, you're going to have a problem.
Which it's possible they could just deny your claim altogether, right? So basically, you pay the premium and you have zero coverage.
Depends what it is. Yeah, it depends on the situation. Depends who the insurance company is. Depends if they're standard market. And this is getting into details that we don't need to dive into a rabbit hole of. But are they in the standard market, or are they excess and surplus market where they don't follow necessarily the same guidelines?
Like if a tree falls on a house and a short-term person is there, or a long-term person. Who's to anyway? That's a dumb comment. But also they're going to be incentivized to find a reason to not cover it, obviously.
The good thing nowadays, though, to be honest, is like most of the companies that we work with that do long-term rentals will do short-term as well, and it's really
like a rider, correct?
Yeah, I'd say 80% of the companies that do one do the other now. The vast majority of them. So most of the time, you're not going to have a big swing. With Proper, that's, more for where we see them come in a lot is somebody has like a luxury Airbnb, and it's, big house and it's hard to place. And they're just like, hey, I have this property and I do not want to mess with the coverage on this. Like, I don't want to mess around. We'll call them. And they do a great job.
Can you speak on umbrella policies at all? Is that something that you can sell our audience?
Yeah, very worthwhile to have. Liability insurance in general. There's a few different kinds. You can have personal liability on a standalone policy that covers, typically the most common, covers outward facing liability. You get into a car accident, somebody gets hurt at your house, somebody gets hurt at a rental that you personally have in your name, and they come after you for money. That policy is designed to cover anything that is in excess of your other policies, that have $300, $500, or $1 million of coverage. That umbrella policy for $20 a month would give you an additional $1 million in the event there's something quite serious that happens.
Yeah, and people might not realize, but if you get in a car accident and someone gets like disabled for life and can no longer work again and has headaches all day long, just because you have coverage to $2 million doesn't mean that you're not responsible. If their lifelong injuries are $4 million, you have to pay the $2 million difference.
We had
right?
Yeah, we had a client a couple years ago that had an umbrella policy with us, and obviously very unfortunate situation. Very glad that they did it. You can also get uninsured and underinsured motorist coverage on umbrella policy. So it covers if somebody
hits you.
Yes, your auto policy has that typically, but your umbrella policy by default does not always. Well, he had it. He was in a head-on collision and went max and had a 7-figure claim on it because the other driver didn't have sufficient coverage, and that situation was 2 years ago. It's still going on right now.
Wow.
Yeah. And there are a ton of people who don't have coverage in Minnesota, correct?
Pretty good percentage.
I'm dealing with it right now.
Yeah.
I got hit. My shoulder's messed up from this motorcycle accident. This guy turned right in front of me up in Columbia Heights. And so I'm working through it with my uninsured motorist coverage right now. Yeah. But it's been a nightmare.
Yeah.
Talk to us about rental properties and liability, slip and falls, well, let's start with that. I've got another one after that.
Yeah, so there's two main kinds. If we're talking about a residential policy, that is the most common that you'll see, because you can get, if you have enough rentals or a situation that warrants it, you can move to a commercial policy that's more general liability. I won't get into that, but for most people that are listening, I have a 1 to 4 unit property or properties. There's two kinds of liability. There's premises, which is somebody trips and falls, they get hurt, something happened on the property. Hey, I got injured, I'm coming for you for money.
Yep.
The other one would be what's called personal injury liability, which sounds similar. What that is in the event that somebody makes a claim against you as the landlord and or operator of the property, wrongful eviction, invasion of privacy, things of that sort. Those are the two common ones. I think with policies, a lot of times people assume those are always all included, and they're not. Usually the premises is by default. The other one very frequently is not.
Probably don't see too many claims on the other one, I'm thinking, right? Or do you?
The wrongful eviction, invasion of privacy. Yes and no. It depends. Yeah, yes and no. Probably not as much as the tripping and falling, but I'd have to look.
Tell people about what PIP is and why they might want it.
Like personal injury protection for auto.
Yeah.
Just in the event that like you are injured in an accident where you need supplemental medical or disability coverage. So in the event, you're injured, you're out of work, and you need medical coverage, it provides that for you. And I'm guessing you're asking because you know that you can exclude that in Minnesota if you elect to, but it's not necessarily. I mean, it's not super expensive, but it's not free.
Yeah. Some people don't talk about it. So like a lot of times when people are just looking at premium only, they don't realize what they're maybe carving out. Totally. There's also, what is it? I forget what they call it. They used to call it hush money or bribe money as a little bit of a joke, but like there's a certain amount of money that they will basically give out, no questions asked. I can't remember what the term is, but it starts at 1,000 and you can kind of bump it up to 5 pretty easily. It's for slip and fall injuries,
medical payments.
Medical payments to others. That's what it is, right?
Yeah.
So that money is basically, it's like no deductible, and it's just like there's a small thing. We don't want to even involve lawyers, right? Like the person needs $2,000 to cover a medical bill, and you don't have a deductible or anything, correct?
Yeah. So it depends on the company, but typically you're going to see like 1, 2, 3, 4, 5,000 of coverage for that. That is very rare. We see it get used nowadays because either it's for $1,000. If somebody's really going to give me a hard time about it, most people handle it outside of their insurance. If they have like somebody get injured on their property for $1,000, they'll just be like, here, shoot, dang it, but here you go. So they can avoid filing a claim and having a negative impact from that. If it's larger, that's when you see it get into the premise, other stuff, the liability insurance, where somebody's coming after me, and it's probably a larger situation that would warrant somebody doing that.
Well, we're at about an hour here, Jordan.
Oh, wow.
Thank you so much for doing this today. I don't know if you have a final question.
Yeah, we got to ask one more thing. We got to get into the subject of dogs and landlords and like what is covered, what dog, what is generally. I know you have you could probably get any pit bull covered if you need to, but what should landlords know about dogs and their responsibility and liability on dogs?
Yeah, just because it's not your dog, just because it's not your dog doesn't mean that you can't be brought into a situation if it happens on your property.
Yeah.
So yes, we can find instances where somebody wants to allow pets or certain kinds of pets at their property. Obviously, the hot topic one is probably certain dog breeds or things of that sort. I would just say don't assume that, hey, just because it's not your dog, you can't get brought into a situation with it.
Yeah, our policy has dogs that are excluded, and that's why I want to bring it up. And we have that list, and you're even with anything other than a service animal, you're just simply not required to take on any breed. Even though it doesn't matter if it's an ESA. If it's an ESA that's a pit bull, you do not have to accept it. It's not considered a reasonable accommodation if your insurance company won't protect you or it's going to increase your premium. Right, and there's some dogs that increase your premium, so just keep that in mind.
Totally.
My last question was, do you know much about home warranty companies?
Not a ton. I mean, we run into questions because sometimes, my PMI, home insurance, home warranty, which one do you do? Sometimes people ask us that if it's their first time buying a property. Not a ton.
I'm a fan personally. I've had good experience with American Home Shield over the years.
Yeah.
I think so many first-time home buyers, even if it's just for the peace of mind for a few years, it makes a lot of sense. And then you hear these, I've also worked with companies that are similar to home warranty companies. Like you buy a fridge and it has a warranty, a third-party warranty attached to it. Oh, sure. Those companies, they're criminals.
Yeah.
So I just, if you don't want to speak on it, because it's technically...
We just don't do a lot with it. I mean, I know people get them, and same thing I've heard. Some people are like, yeah, it's great. No, we don't do them at all. So... yeah, we don't run into it a ton.
I have home warranties on 2 of my rentals, and I just keep renewing them every year.
Really?
And I had some sort of issue with the boiler. I couldn't even tell you what it was, but it got fixed. Wow. $125.
Yeah,
that's pretty fair. Yeah.
Yeah, and then they tend to get cheaper over the years. The first year might be $700. You need to you can't do the basic plan if you want AC coverage, and that's a big component. But I think I'm renewing at like $400 a year on a few of these houses. So shout out to American Home Shield.
Yeah.
Well, cool, man. Thank you so much for doing this. We will put your contact info in the description.
Sure.
But it's a good time as any, good of a time as any to probably look at what you're paying for insurance. And I'm assuming you'd be willing to do that for people.
Yeah, absolutely.
I thought of one other thing we talked about. We got to cover this too. You had told me that it's actually coverage for in Minneapolis and St. Paul is different than the suburbs when it comes to rentals and I think duplexes. When we met, it was actually easier. Can you talk on that subject real quick? I mean, this is probably important to our listeners.
Yeah, totally. A lot of times people always assume that rentals are more difficult to get coverage on. And understandably so, because they pose a little bit more of a liability risk potentially. In a lot of the Minneapolis, St. Paul area right now, it's actually easier to find carriers out of the hundreds that we work with to place the older homes, the older roofs. And the reason being is purely from the claims numbers of the last 3 to 5 years. Hey, if you live in a home and it's your primary home and somebody door knocks you or you have hail damage, what's the likelihood that you're going to file a claim versus, hey, I live in Hopkins and I have a home in Minneapolis or St. Paul and may or may not have had hail damage. It may or may not get door knocked. My tenant may or may not answer. If they answer, they're like, give this to the homeowner. And then, it never gets to me. So the claims frequency is way different. And so it's actually sometimes easier to place some of those older homes. We can do it for both, totally fine. But honestly, on primary homes with the older roofs, we're finding it more where, hey, you have 10 companies that'll take this versus on the rentals, there's 50 here, even though the roof is old, even though there's a couple claims, so on and so forth. Yeah, it's a great question.
Well, I just wanted people to know before,
Yeah. Well, I was trying to plug you there, Jordan.
Thank you. Yeah.
Sorry.
Then we just hit a quick turn.
Yeah. I mean, people can reach out to you.
Yeah,
and
definitely.
You'll probably
Happy to help.
look at their coverage and what they're paying, and perhaps they could be better covered and maybe get a better deal.
Yeah. Can I just share our process quick? Is that okay?
Yeah. Take all the time you want.
Effectively what our process looks like, and anybody can reach out to me, just search my name in Google. You'll put the email in there. My phone number is, on there as well, I'm sure, is what our process is. We'll typically schedule a call and we'll do 10 to 15 minutes. Hey, what's your address, date of birth, what properties you need to insure, things like that. Then while we're on the phone with our client, our system will run through all the companies that we have. We'll get numbers back. We'll discuss it and then say, hey, here's how this compares to what you currently have. And, would you like to make a switch or do you need time to think about it? Or occasionally, hey, stick where you are. You got a good deal. Call me in 6 months or I'll call you. And usually that takes 30 to 45 minutes, going from start to finish. So it's pretty simple. Most people assume, hey, this is going to take a week. Call me back when you hear back from all the companies.
I'm going to have to gather all this stuff.
Correct. Yeah. It's 30, maybe 45 minutes on the phone.
I got a favor for you, actually.
Sure.
And I want to have some collateral for people. There are certain questions you guys ask, like to get a policy, like age of roof, stuff like that. Mm-hmm. Can you give us those questions and we'll find a way to attach those to the website or something, like as a resource, so that if someone's looking for a house, they know what they need to know to get insurance, right? Yeah. It'll be just kind of like a benefit to everybody,
Totally. Yeah, we can definitely go through that.
Okay, cool.
Well, thank you so much.
Yeah, thanks so much, Jordan. See ya.
All right, man.
So, nice episode with Jordan. I'm dealing with this tenant ceiling issue this afternoon.
And I had a tenant ceiling issue too. Completely different reason, but yeah.
It really has been an eye-opener for me. Just liability, man. It's a big deal. We work so hard to grow these portfolios and build wealth, and a little bit of bad advice combined with some bad luck and disorganization can wipe all that out, right?
Yeah. I don't want it to completely freak people out, but you you do want to have good insurance. I tell people all the time, people, you've seen this, it's not as common anymore, but it used to be like every week someone would be on Bigger Pockets going, how do I start my LLC? Should it be in Delaware or not? And it's like, I was just to tell them two things. Number one, it's way more important to find a good deal. You're focusing on the wrong thing, right? But secondarily, good insurance is way more important. Because an LLC doesn't stop you from getting sued. It just protects your assets.
Right.
And having great insurance also doesn't stop you from getting sued, but it's your first assistant in it, right? Because even though they're not directly, the insurance company is protecting their interests, but your interests are aligned up until your coverage amounts. So meaning like if someone sues you for under $500,000 and your liability coverage is $500,000, you're good. You guys are aligned, right?
Yeah.
And if you've got an umbrella policy that covers you up to $2 million, the umbrella policies actually, that's where they really have agents, because their whole goal is to make sure they really don't have to pay out. They'll pay a lot to attorneys to make sure that the whatever settlement is below where their coverage starts. So you kind of, in some ways, and again, this isn't like legal advice, but in some ways you are kind of like hiring really awesome attorneys when you get really great insurance,
Yeah, it's a great point. And you don't want to freak people out. Like we joke about like the 2 a.m. toilet call about how that doesn't exist.
Yeah.
The reality is that the calls are few and far between if you buy quality properties and you maintain them. Mm-hmm. But if you do this for long enough on a big enough scale, you're going to deal with some shit, know? And so...
Yeah, because life happens.
There's certain personality types that, if it's going to rock your whole world for a ceiling to cave in, I don't know. Because it's going to happen, I guess, is what I'm saying.
It absolutely is. And how you deal with it is obviously under your control, but the whole insurance side and having people available, like you were telling the story on the podcast itself and you acted fast, and that's exactly all you can do. What can you say?
Anything going on in your world as an investor, Tim?
Yeah, I'm starting on the lookout for a BRRRR. Yeah,
okay.
I had someone pay me off on one of my contract for deeds. I've mentioned before that I had 4. Now I have 3. So
okay,
it wasn't a huge sum of money. Those are very stable deals, but they're not overly profitable.
Okay.
So the check isn't a gigantic one. That's hence the BRRRR, because I can afford money down on a hard money loan, right, and pull cash back out hopefully, or even just leave it in. I don't need to pull it out necessarily, but that's one thing.
What do you think your buy box is at this point? What do you want?
I'm a little bit. I'd like something that I'm thinking more along the lines of a multifamily is my ideal, but I'd also take the single family that worked. Right. I'm definitely thinking Minneapolis, St. Paul. I wasn't really thinking suburbs per se.
Okay.
Yeah, I've really liked St. Paul lately. I'm surprised, but I just feel like that's where the deals are. It's, for whatever it's worth, we talk about it a lot, but rent control suppressed prices, but hasn't suppressed rents. And it's just it's kind of a sweet spot, I think, in the Twin Cities. So,
well, we did a little bit of preliminary, data collection the other day, right? Yeah. When we were going to do an Adam and Tim episode, and then we ended up having one in the bank, so we didn't have to, publish it. So you guys haven't seen it yet, but rents in St. Paul are going up at a pretty healthy clip post rent control. So you guys can look forward to.
That episode will be coming out. It's a lot of work to do them and to do it right. So hope it might be 2 weeks from now, something like that. 1 to 2 weeks from now.
I'm searching right now. Oh, here it is. So, here's a little plug for myself. So I joined Real Broker. I left Bricks, my old broker, a few months ago, and we are putting together a group of investor-focused real estate agents. I think a lot of agents are acting like they have a cloud-based broker, especially post-COVID.
Yeah.
But they don't. People are paying Coldwell-type fees when they really should be paying Real or EXP type fees.
Sure.
Because that's the type of support they're getting. And so, I probably should have joined Real Broker in 2019 and I'd be a much more wealthy man. Anyhow, if anyone's listening and you're a real estate agent or you're thinking about getting licensed, we're putting this coalition together of agents who want to be better at working with investors, or perhaps you're an agent and you just want to be a better investor yourself. And myself, Tim Devane, Tyler Nash have this little group. It's a weekly meeting and a monthly in person, but it's the sharing of off-market deals and creative strategies. I'm doing a subject to deal right now for a mutual client of ours that came out of this group. So anyways, there's my shameless plug. We are looking for a building. And I've never bought anything in the commercial world. This is a 2-unit. It's technically a commercial designation in zoning and in use. So there's a salon on the main floor. It looks a little bit different right now. They've improved. The owner has some sort of connection to a really talented interior designer. So they've done a lot just with furnishing and paint and light fixtures.
And for the audio crew, he's showing some pictures. You could view it on YouTube of the interior of a beautiful, grand, painted duplex. Painted meaning they used to call those painted ladies, right? This isn't exactly Victorian, but when you got all the multiple paint colors, right?
Oh, sure.
There's 3-4 different paint colors. Those are like painted ladies is the term I've heard.
I learned something today. I didn't know that. Yeah, the curb appeal, it looks better in this photo than it does in person.
Oh, does it? Because it looks pretty amazing there, actually, yeah. It looks like it's a really cool...
Well, and so a big part of the appeal to this building is the location. This is Grand Avenue, right on Hamlin. If you guys know where the Colossal Cafe is, it's like a half block down from Colossal.
We went to lunch or breakfast there a couple of years ago. Remember with
we
Cal?
did?
Yeah, you, me, and Cal. Yeah, right when I was switching from, I think was when Celebrity went under.
Yeah,
was blown up. Yeah.
That's right. Yeah. So I bring my kids to the Colossal Cafe like 3 days a week after preschool. Anyways, the signage and visibility is really important to us, and the curb appeal is lacking in a major way. So we'd be doing a full paint job. A lot of this trim too, you can't tell.
It's just in rough condition or something?
Yeah, and it's like whoever put it together, it's all like right angles. You know what I mean? Like there's no scribing went into any of it. It's just like butt joints everywhere.
Gotcha. Okay, gotcha.
And then
when you get close, that is exposed.
It doesn't look great. I think our exterior budget would probably be in the $50,000 range. And then obviously we got to pay for some nice signage.
Make sure there's not some sort of a overlay, like a historical or some other, like where you have to keep the colors the same or
that's a good point.
That kind of deal.
It looked completely different like 10 years ago. So I don't think that's the case, but it's a good point. Anyways, there's this commercial, technically a 2-bedroom, 1-bath space, which we think could be our more of our client-facing part of the building. Mm-hmm. So it's comfortable. We could do events there. If we end up buying this place, we'll definitely probably host some meetups here. I wish it was a little bit bigger, but again, we're a small team, so not a huge deal. 2 offices, so Tim and I, who are closest to location, would probably each take one of these. But then upstairs, and I wish I had modern photos. They've done quite a bit with the kitchen. The kitchen looks a lot nicer now. But it's your classic turn of the century St. Paul, right? All the woodwork's in great shape. Floors are in great shape. Upgraded solid wood windows. My thought is we do an Airbnb on the second floor because that should be an easy $4,000 a month. Perfect location, perfect condition for Airbnb. It's got the porch. 2-bedroom, 1-bath perform really well in St. Paul, by my experience.
Okay.
And again, it looks nicer now. They didn't do anything super dramatic aside from the kitchen. And then it's got this attic space, which we all know how tough St. Paul will be when it comes to licensing this. Mm-hmm. However, we kind of see this as like the sales zone for our business, right? So if we're going to do lead generation, we do spend a lot of time looking for off-market properties, and it's a lot more fun to do that when someone's next to you making calls.
Sure.
So we kind of see this like the boiler room upstairs, right? It wouldn't take a whole lot to get this completely finished. And I think we would keep most of this rustic look. Like maybe we even keep the rafters. I think there's a way to make it livable, but kind of keep the rustic old look to it.
Interesting. Can you get to the third floor and bypass the second so that you're not interrupting the Airbnb?
Exactly.
There's a back stairway or something like that. Okay.
Yep. And everyone has a really nice porch, including the third floor. They all have their own private balconies.
I mean, that would be, the balconies would be cool just for like socials too. Again, you can have people there,
On Grand Avenue in the summer, we could do some stuff for Grand Old Day. And then obviously this is a neighborhood that I really love and is close to my heart, Summit Hill, Crocus Hill.
Yeah.
We just do a lot of multifamily sales in this neighborhood. So we could, just be a tighter knit part of the community. But, a lot of questions. I've never done a deal like this before. And it would be buying in a partnership, which I'm not super familiar with either. So, but I'm not going to, I think I'm going to not share address or pricing right now, but it's pretty enticing.
Yeah. It's pretty cool.
So that's what I got. That's what I'm working on this week. You want to go over this jobs report?
Well, kind of. I do want to talk about that, but I also wanted to quickly talk about the meetup. We had a meetup last night, and it was maybe best one so far, right? It was just like super great energy. And
nice.
The reason why I wanted to bring it up, because we do talk about it a lot, but at the end of the meeting, there were several people who kind of exchange information. Well, I saw several people exchange information, and I was at a group of people stayed at the end, and they're going to do a dinner together, right? And so the reason why I want to bring all this up is we're trying to create a community that's for everybody, right? It's like someone mentioned it to me, and I was like, yeah, well, Adam and I can only do so much, right? Like I can only talk to maybe a dozen people at an event in any meaningful way, and probably even less than that in a meaningful way, right? So we're all there to contribute, right? It's not just about you and I, it's about everyone meeting each other and sharing ideas. And that is happening. It's like a really good vibe. And I just want to encourage people to come, bring their friends, and let's grow a really cool community.
Yeah. If you're brand new, if you are a consumer of real estate content and have not yet invested in real estate, there's no better way to spend your time than just to start rubbing shoulders with these people, because for whatever reason, the nature of our community is that we're very just abundance mindset across the board.
Yeah.
No one is holding any secrets. And if you haven't been to our meetup, you go to TwinCitiesRealEstateInvesting.com, and you can find links to everything, including the meetup. Mm-hmm. And I'm sorry I couldn't be there. My oldest had kind of a rough day on Monday, and, I just wanted to do something special for him to cheer up, and he loves the Timberwolves games, so we went to a game last night, and that was awesome.
Family first.
Yeah. All right. Well, why does the jobs report matter? Why should I care?
Well, there's a few reasons. So everyone always asks me about interest rates, right? And they always kind of go, what's going to happen? And of course, I don't know exactly, right? There's ups and downs, but there's definitely a lot of signaling going on right now that I do believe we're going to see some loosening in interest rates, right? And I'm going to tell you kind of like some of why. And I think it's best to kind of start with, do you listen to the All In podcast ever?
No.
Do you know that one? So the All In podcast is a few billionaires and 100 millionaire that all get together and do a podcast. And it's a lot of business stuff, political. And they were talking about the Fed chair that's coming in on the last episode. It starts off with like Epstein file talk, and then is SAS dead? And then the last thing they talk about, and they were talking about data collection, and Scott Besson's been talking about that, and I've mentioned it before, and you were kind of like going, there's no way they're doing this, right? But the federal government really does like make up data, and then our whole economy is based on that data, like including like the Federal Reserve makes decisions based on these really bogus reports.
And real quick, when we were talking about it, was I questioning their methods when it came to
you were questioning the methods,
calling? Yeah. What was I questioning?
You specifically mentioned, so they survey people, but they survey people by phone, depending on what it is, by phone, because that's how they're getting consumers, right?
And they're asking
they
people,
don't email consumers. They're
asking people, how much do you think you could rent your house out?
Yeah, that's one of the questions. What do you think you could rent your house for? And that is how it's called owner's equivalent rent. And that is one of the ways. So that is not the report I'm showing you today, but that is one of the big factors in inflation. And inflation is a major factor in the interest rates that you have. Right. And so like, it's really, and so and something happened yesterday, and it was so egregious that I just wanted to kind of bring it up so I could show it. I'm not going to spend a ton of time on it, but it's like, it'll show you the inside circle, but also if you're also paying attention and you're hearing the current administration talk about this stuff, they're not buying it. And here's what I'll say. So Scott Besson, right, the head of the Treasury, he's not buying the data collection. He's saying we need better data collection. We're not doing it right. And the All In podcast was talking about that the other day. Like, we're not collecting data right? And this is a good example. So what we have up on the screen is something called the BLS private sector job number. And they said that 172,000 new jobs were created last month, right? This is a month ago. Okay. So as of January, right? And so that would be an awesome number. And that would mean that the Fed should not lower rates because the job market's really strong, right? But if you look at ADP, so they make up this number. Like the BLS number is
what does BLS stand for?
Bureau of Labor and Statistics. And so when I say they make it up, they do these things where they just call people and ask them questions, right? And they do email businesses and have them fill out forms. But then what they do is they have this thing they call the birth death model. And some of these jobs are just because they say, this is how many businesses like registered as new businesses. So this is how many jobs were created. Right. And then if a business dies, meaning it went out of business and they know about it, then they take some jobs away. Right?
But what about businesses expanding? That has nothing to do with it.
No, that's some of the survey stuff.
That's where most jobs are created. They're probably not created by brand new businesses, right. I would imagine.
Right. What I'm trying to say is like a lot of these methods were like, they were started pre-computer and internet, and they're still doing the same damn stuff. Right. Instead, we have in very little, the business sector looks at ADP. So like if you're running, I don't know, Best Buy or some large major company, Target, whatever, you're making your decisions on what does ADP say, because ADP actually issues paychecks to private sector jobs. ADP said there were only 22,000, but the Bureau of Labor Statistics said 172,000. Now you might say, well, what if the BLS is correct, right? I'm going to get to that on the next slide. This other Ravello, I don't know of them as well, but they actually said the number was negative, right?
And they're competitor to ADP?
They're like an ADP type. They're another private sector.
For those of you who don't know, ADP is like probably the largest processor of payroll in the country, right? Private company.
Yeah. Okay. And so they can take their numbers and be a lot more accurate, one would say, because they're actually issuing paychecks, right? And how many do we issue? And, and they can get, there's still some modeling going on. There's a couple other things here too. So JOLTS is how many new job openings there were. And the negative 600,000 you see on the screen means there were 600,000 less in January, new jobs being posted on things like Indeed and stuff like that than there were the month before that. So we went down over 500,000 jobs in 1 month.
And that should be easy to track accurately.
That is
right?
Certainly more. Yes, that's certainly more. And then the Challenger report has to do with job cuts. And so you can just see here on the screen that it's the lowest hiring. These are like businesses start saying like, what are we planning on doing? Job cuts and stuff. And essentially that report just came in the lowest number in 17 years. So there's a lot of reasons to believe, okay, jobs are not doing all that great right now. Yet the Federal Reserve is using the BLS number for all of their decisions. And this all ties back into the new guy who's coming in has been indicating that the numbers they use are bullshit too. So there's this track that like, hey, our old systems aren't right. Go ahead into the next screen and we'll speed it up a little bit, but I wanted to show this is the last 12 months of BLS reports. The first number is the original, and then you'll see they revised the number down. If you look at January of 2025, the number got reduced by 159,000, meaning that they came out with a positive 111 job creations, and they realized they actually lost 48,000.
Can you quick just... How is the revision process? Who handles that?
They revise it every month for a couple months in a row. So it's the BLS. So what happens is they kind of they make up this guess number, and it truly is. It's a model. It's a lot of non-factual data. And then they basically go back and they say, how accurate were we? And they'll
But how do they know how can they determine their accuracy?
That's a great question. I don't actually know the answer to that. I couldn't say what their methods are.
Right.
But they get more accurate methods, and then they go, oops, our 111 actually was 48. But by the time this 48 comes out, it's 3 to 4 months later, and the Fed's already made their decision on the 110, and they're looking at the next one down, which is 102, right? And then so forth and so forth. And so you'll see here, if you look closely, there was only 1 month, October of last year, where actually the revision went upwards, meaning they started off with a low number and they said, oops, we were wrong. We were actually too low, meaning there wasn't that many job losses. There was less job losses than we thought. But it turns out they were wrong in a month where they said we had lost 173,000 jobs and we'd only lost 140. So
yeah, we're pulling down most of the time.
Yes,
but in that case, it was different.
They're all down except for October.
What happened in October? Something.
That's a great question. Yeah, I'm not really sure.
Yeah.
But all of this is to say that, by the way, this is all non-farm employment, right? And also non-government employment, and that's going to be important on the next screen. So the whole point is they come out with these numbers, and this happens in inflation too. But they're actually not correct. And people buy stocks based on it. We get interest rates based on it. And then later we find out the number was kind of all bullshit. And so when you say what's going on with rates, well, it's if we get these bullshit numbers, the markets react bad. And what this all came up with is interest rates were getting great, right? And then yesterday this report came out and they went bad quickly. Today they're back up because everyone kind of looked at the number, saw what happened, and said, hey, these really are BS numbers, and now interest rates are back on a nice trend. So people are starting to not believe the data, finally.
I was checking my stocks app because I almost guarantee there was going to be a jobs report, headline but this was a couple days ago.
This is yesterday. Yeah.
Yesterday?
Yeah.
Interesting. Yeah, nobody's really reporting. You want to go to the next slide?
Yeah, go to the next one, and this will just be, here's the other interesting. So remember it said 172 new jobs, right? So they do count the actual jobs. Non-NSA stands for non-seasonally adjusted. We lost 2,650,000 jobs in January. Now, the reason why it's non-seasonally adjusted and we lost that many is because a lot of those jobs are part-time work in retail during the Christmas holidays in restaurants. And so we expect this every year. But then they just estimate how many, if we lost 165 and it wasn't January, what would we have actually had? And they make up a number. And the number they decided to make up was 172 to the positive. So they basically said there's no way we actually lost 2.6 million. We really had it looks like we did, but if you adjust for the season, we really had positive jobs of 172, right? So that's what that is. And then if you go down to the government section, do you notice the government, that's real data. We actually know this because of payroll, that we lost 42,000 jobs in the government. So if you take the government and you believe ADP, we probably lost 20,000 jobs last month nationwide. Probably.
Sure.
These are
Which
estimates.
Is not a huge.
So that's not
a huge figure, though.
Not a huge figure, but it shows it does show jobs are declining in general.
It's a trend,
and it just shows the job market might not be as good as we think, right?
Yeah.
And that even there's a lot of stuff that I listen to on a daily basis about jobs because it is so important. It's one of the two factors of the Federal Reserve. And the reasons that they gave to not lower rates in the last, like at the last thing, was jobs. Jobs are too strong. We're not going to lower rates anymore, right? Well, they were wrong. And everyone kind of knew they were wrong except for them because they use these, it's kind of like they hang their hat on this bad data. And that's really what I wanted to point out. But the people are coming in, meaning the new Fed chair and Scott Bessent and some of these other people are starting to go, other administrations use this bad data, but we're going to collect better data and we're going to kind of start ignoring this data a little more and go to the real, ignoring the bad data, like the real kind of like made up stuff. So anyway, I just thought it would be something interesting for people to know. And when they start hearing about like even low employment, higher low inflation, you kind of got to look at the numbers a little bit deeper because there's things they do. Like, for example, inflation is absolutely lower than what they're saying, and it has to do with how they collect rents. But when rents start going up, it's going to look like inflation is lower than what it actually is. It's just the way they collect rents, they're just not real time enough. And the rental data, and it causes problems for us in the real world.
Will you explain something to me?
Sure.
I met with a woman yesterday who I think is going to be working for me in the next few months in an administrative capacity. And she had just gotten back from, some sort of real estate government function. She's in Wisconsin. She's in Eau Claire. And they were talking about how many thousands of homes they are short. Will you just explain to me who is calculating how many homes we are short? And if I just think about like demographics and how the boomers own all this real estate.
Yeah.
And who's to say we're short a home?
Yeah. So, okay, I can answer that, but I'm going to define a home real quick because a home doesn't mean a single family house.
Okay.
It means like a living unit. So they include apartments, condos, you name it.
Okay.
If it's a living unit, it's counted as a home. And there are a couple of different places that again, some of them are federal or like the Federal Reserve. The one I trust the most because it is an independent party is Case-Shiller. They tend to be, because Case-Shiller they're two professors. One of them, I believe, is Harvard, and the other one's like some of our Ivy League school. They came together and created like basically a data collection company. And they make money, but they're not on any one side, right?
Okay.
Most of the other sources are basically funded by real estate specifically. Case-Shiller several years ago said we were 5.5 million homes short.
Okay, but you're not answering how do we know we're short a home?
How do we know we're short a home is they know how many new households people like how many new people create households. They can gather that data. So like a new household is Calvin moves out when he's 18. That's a new household, right? But then he gets married to someone and two people become one, and that becomes one less household, right? So they have these household formation data, and then they can track how many people are dying and how many people are how many new households we have on a yearly basis, and determine like how many homes it would take. The how short of homes we are is like if they dropped that many homes into the U.S. and they just magically appeared, everyone would have a place.
So what are all these people doing without homes?
They live with their family usually, or they're homeless.
I don't know if I buy it. It just doesn't totally. Yeah. Do you understand why it doesn't make logical sense to me?
Yeah.
I don't. That we have tens of thousands of people that would be in a home, but they're with mom and dad because there just isn't a home.
Because they can't afford it, right? And so part of it would be like,
well, then we're not short $1 million home if no one can afford the $1 million home,
right?
Right.
Well, we do build the wrong type of houses for sure, right?
Okay, but stay on track.
Yep.
I still don't buy it. Yeah. I don't get it. I mean, here's what I can understand. So if you're watching on YouTube right now, this is Twin Cities population, Twin Cities metro over time. Okay. Which is steadily increasing. We're back in 2000 we had 2.9 million. Today we have 3.7 million. Flatlined during COVID. Other than COVID, pretty much consistent growth.
Yep.
And which we've done this before. I want to say is like 2 to 3% a year. You're filling average yearly growth. But now we have immigration, babies being born, people living longer, and urbanization.
Yeah, and immigration it's only estimated until you have a census, right? So like between the year 2000 and the year 2010, and then 10 to 20, we don't necessarily know in any given year our true population, right? And I guess we never do because like not everyone goes in the census, but we can know how many people are born. That's kind of that like in hospitals and such and all that, and we can be precise enough about that. But what I would argue is we don't know how many people live here actually, right?
Yeah,
I would think it's way more than 3.7, right? Because we also know that there's enough around that right now that we know that would be true. We just don't know the actual number.
Well, in 2023, builders pulled permits for about 10,600 total housing units. So that's houses, apartments, and condos. And at the same time, we added 30,000 people. So this is why I keep buying houses, but I still don't understand how we're predicting. There's something to be said for the baby boomer population and how they're aging and how much real estate they own will affect things, and it could be a short-term effect. Or maybe we're so freaking far behind that it'll just help out with some pent-up demand, and that'll be the end of it.
Well, but help up with pent-up demand, I want to be real clear, means housing prices can drop, right? I mean, because like you said, it'll help affordability. So you could argue that like we're never short homes because people don't necessarily live on the streets except for truly homeless people, right? I mean, everyone else finds
not going to be buying a home.
Yeah. I mean, everyone else finds a place to sleep at night, right? Mm-hmm. So what does it mean? If I'm going to kind of like just kind of go off on a little bit of a somewhat educated but not completely sure of a guess, is it really means that like the average household is 4 people, right? Because you got mom and dad, 2 kids, right? And so they have a statistic of, for a population size, is how many people live in a housing unit on average, and we know what our population is. This is how many homes we need, right? And then when we get below that, then okay, there might be more than 4 people living in a place. It might be 6 or 8, but that wouldn't be ideal had the housing price be better. Right? It's kind of how I'm gonna go with how they're calculating that, because I don't study that tremendously. I do know that it does affect all kinds of programs and lenders and all kinds of stuff.
I mean, I just did a quick, so the Board of Realtors, they are going to be biased in the way that they want people buying homes.
Yeah.
So they want people to be confident in the housing market. And so the Board of Realtors saying we are short X amount of homes benefits them probably. Yeah. And I just searched what's their formula? They're going by supply. So a balanced market is at 4 to 6 months of supply.
Yeah, and we're still below 4, right? 3.7 is what I saw today or yesterday. No, today.
Let's see.
This is nationwide too. So a lot of my statistics that it's from a nationwide show. They're not Minnesota specific. So
we're 2.5 months supply in the Twin Cities region.
Yeah, I mean, so for the record, so Texas built a lot, right? In Texas, actually, the branch that I work for is based out of Austin, Texas. And so I meet with Texas people weekly, every Monday, and we talk about our market some. And that market is not nearly as good as ours, not even close.
Check this out. This is why I invest in Class A. I think about you taught me years ago about how Edina home prices remained pretty flat during the housing crash.
Technically went up a little bit, not a lot, but yeah.
And I think about that all the time. Not only is real estate local to the Twin Cities or to the city you're in, it's local to the neighborhood. It's local to, is there a gas station across from what you're buying, or is there a park? And so nationwide, home sales are flat. People are underwater on their homes nationwide who purchased in the last few years in a lot of markets. It's not the case in the Twin Cities for almost everyone. And it's certainly not the case I just bought a house in Highland Park where supply is going down year over year. Look at this graph, and we're zooming in a little bit. We have 1.4 months supply in Highland Park.
Instead of 2.5.
Instead of 2.5. Yeah. So roughly, 40%. My house could perform 40% better on an appreciation perspective compared to like the median Twin Cities home. Let's go back to the metro. And the graph is what I'm interested in because, sometimes I look at these graphs. This is inventory chugging up. As inventory goes up over the Twin Cities region, well, we still haven't seen a decrease in pricing. This can't happen forever. If this staircase, but it doesn't look like it's flattening out a little bit at the same time.
Yeah.
And
but look at what happened.
We got to zoom out too, because
if you look further out, you see these kind of patterns do happen. Patterns like kind of reoccur, right? So,
and I mean, look at this. Like, let's just say that because I'll be completely honest, I had less confidence in housing over the short term. I always have confidence in housing long term, but like I'm buying houses at kind of a pretty good clip for me right now.
Yeah, you've bought a lot lately.
And sometimes when you buy a lot of houses in a year, you lay in bed at night and you think, wait a minute, what am I doing?
Right.
And part of me laying in bed at night was thinking about inventory can't just keep going up.
But it's super low.
And then let's zoom out to, listen.
Can you get like more like a 40 or 50 year window there?
I can't.
Does it show that? No. Okay.
This is max for, I think this is probably when North Star went online.
Oh, sure. Because there are some, like, if you look here, there are some years there, 2008, that's just completely, that is such a different market that we're in. That was twice in the history of our country type event, right? You've got the Great Depression and then you have 2008.
Yeah.
Those were the two big housing events that were massive. And so you can't count that as normal. It still is something you should consider, meaning that like that could happen again. If you have to sell during that time, it's going to be bad, but you don't plan on selling at that time. And we don't say 10 months or we're going to give back to 10 months supply anytime soon.
Right, and the inventory level we're at right now, which is 2.5 months, if we want to go back to the last time we had 2.5 months as a broader market, well, 2019, we were sitting just about there. Technically, June of 2017 was the last time we had 27 months. But guess what?
And we
were appreciating.
Buying houses like freaking crazy then. Everyone was, I bought 5 that year.
Yeah. As you should have.
Yeah. Yeah, absolutely. I kind of wish I would have bought in 15. Yeah. I bought as many as I could.
But you know what? This stuff is so important to talk about, and this is what excites me the most about real estate, is talking about the demographics and the population and the numbers behind it, because it just makes me feel more confident to go out there and find the next deal.
Yeah. I think you can always poke holes in a market if you want, right? It's people always like, I see the YouTube videos of like interest rates are going to go up and the housing market's going to crash, and like those get clicks, right? And it's so much easier to be negative. When's the last time you just see people like when they give advice, it's almost like, don't buy that, you'll regret it or whatever, right? You never see someone like, you don't see people go up to someone and go, you really way to go, way to buy a house. It just doesn't happen. It's always negative advice.
Boring investment.
Yeah.
That will
exactly.
slowly go up in value over time.
So
it's not exciting.
I kind of try to keep that in mind and go, everyone's going to always give negative advice. I think there's certainly a reason you got to be cautious. I think you have to try to have, what limited cash flow there is in the market is super important to get. I did ignore cash flow for several years and sought appreciation only. And I think both are very important. I know that that's where you make your money is appreciation, but I downplayed cash flow enough that I don't have as much as I'd like now. So,
just for comparison, here's the Highland Park inventory. A lot more flat, has remained under 2 months since 2017. And looks like we're trending down again. So,
yeah,
sell me your Highland Park Rambler, people.
If you're out in the Twin Cities and you're not sure about an area, well, look Adam up. He can get you these. He can get you this data, so you can know, and look early, because the time to try to figure this out isn't when you have to make a decision on a specific house. If you went out to a house to look at it and it's well priced and you're not ready to make the decision, someone who's more experienced and more confident than you is going to make the decision and get the house, right? So start early.
Completely. I had a guy, actually a listener of the podcast, somebody was reaching out to me about a house in a particular neighborhood. Let's just say it was a C-class neighborhood, and him suggesting, I just don't really see appreciation in this type of neighborhood. And I think there's a common misconception that the lower the class of neighborhood, the less of the appreciation. I'm kind of talking out of both sides of my mouth because I'm still personally much more of a fan of the Class A. But the point was, I was willing to address his concern. I went to InfoSparks. I found the data. I screenshot it. I sent it to him. Hey, check this out. And the data is what it is. So yeah, if anyone is curious, and I'm glad that guy reached out and made the comment and gave me the opportunity to enlighten someone to data. So yeah, feel free if anyone's ever curious about anything.
If I were going to generalize about that, and I mean this absolutely comes true in our analysis we did last year, the highest percentage of increases always comes from low end neighborhoods. The problem is they're also the ones who crash, right? When you buy Edina or you buy Highland, what you get is much more stability. You won't get the highs or the lows. But in a bad market, there's still wealthy people who want to move to your neighborhood. Even when S hits the fan and no one else can get a loan, they can, right? You are much more protected and you make more because, look, you can't spend percentages, you spend dollars. And these are more expensive homes and they're just growing at a nice, easy, boring clip. And they will make you a ton of money long term. If you want like a quick juice, you're going to make a lot more from North Minneapolis or East St. Paul or whatever. But when the music stops and the chairs fall, wealthy people don't move to East St. Paul. They move to Highland Park. Mm-hmm. And so East St. Paul crashes quicker. A lot of it has to do with kind of that whole thing where like when every duplex is $500,000 or close to it, and you can buy something in East St. Paul and it's $275 looks cheap, someone will pay $325. It's not worth $325 though. It's worth $275 or even $260. And the second the music stops and the $500,000 place drops down a little bit, and you can get that for $450, or whatever, then that $275 drops down to $230 because no one wants it once they can afford the other one.
Right.
I mean, I didn't give probably the best numbers for that.
Well, no,
that's what happened.
Let's give people the actual numbers. The peak pre-2008 on the Greater East Side, median average sale price was $184. Okay. Which ended up bodying out at $84. Okay. So $184 to $84. And then we'll just keep picking on
Highland Park.
We'll keep picking on Highland Park. We peaked at $298. Don't you hope you're right now, Tim? I think you are. And which then went down to $229. And so
what do we got for percentages on that?
Let's see. Decrease percentage wise of value.
Well, we got a lot more Twin Cities specific on this outro than I thought we would. And it's a lot longer. This is like an episode, but I love it. Hopefully you guys do too. If you've got, as Adam's figuring this out, if you have any recommendations, please let us know. You can go right to the Twin Cities realestateinvesting.com website. And at the very bottom, there's kind of like a form to submit show ideas and guest ideas.
Yeah, so the greater east side of St. Paul saw a 54% decrease after the crash, whereas Highland Park saw a 23% decrease after the crash.
Twice as much. It's just kind of like, it's just those cheap neighborhoods, they overinflate when things go good, because they're still so much less than the higher price neighborhoods, and so people still see it as a deal. But where they're not really buying value, then they're buying price, if that makes sense. And the value would come in like, okay, these houses are in worse neighborhoods, they're closer together, they don't have as good of schools, because they are lower income neighborhoods. The people didn't have the money to take care of them in the same manner, right? They might have taken care of them, but they did the work themselves, or they didn't hire as good of a contractor. All these little different factors, that come in these lower price neighborhoods.
And then the last stat that I like the most, selfishly, because someday I'm going to clip all of the times on this podcast last year that I said, this is the year to buy deals. This is the year to buy deals. I said it so many times.
Yeah.
And I think it was. And, June of 2025, Highland Park median price point was $450. Well, guess what? We're at $500 today. As of January.
Yeah, so that's more than a 10% increase, right?
Yeah, and I'm not suggesting that all the houses in Highland Park went up 10%. That's not what we're saying. This is just indicates that we are going up in the right direction after flatlining between, 2024 to 2025. So, okay. Thanks for those of you who stuck with us for a 47-minute outro.
Yeah.
Go to TwinCitiesRealEstateInvesting.com to follow us and stay informed. Join our meetup, join our Facebook group. Please support. John Scribante just took over. Speaking of this whole water issue, I was in the process of handing these units over to John Scribante to be completely out of the management business. And he hooked me up with the best restoration guy, attorney, bing, bang, boom. He knows the statutes. He knows how to protect you. He's kind of give you legal advice, but I was immediately over my head with this whole situation.
Sure. Yeah, most people would be, so that's fair.
Yeah, and John stepped in, and that was it was a great way to talk to my client and be like, well, by the way, here's John, who I hopefully is going to be taking over my units with your permission. Yeah. And then he took over. So anyways, John and Network Title, and then the guys over at Shook. I've been showing a unit of mine, the crazy unit on Dayton. Shook has me, all over the internet, and the showings are coming in. So thanks, guys. I'll talk to you next time.
That's it for today's show. You can visit the TwinCitiesRealEstateInvesting.com website for show notes, tips, tricks, and other local real estate investing information. Adam and Tim would like to meet with you. To schedule a one-on-one meeting with either Adam or Tim, go to TwinCitiesRealEstateInvesting.com/schedule.